Hello and welcome back to another episode of the Daily Crypto Byte. Today is Wednesday, January 26th, and it is a big day today, CJ. We got the Fed doing a meeting today at 1:30 Central Time. And, in the past, we have seen lots of price action leading up to these announcements, following these announcements. So lots to talk about there. Before we dive into things, how are you doing on this fine Wednesday?
Doing well, Monty. Welcome back. Glad
Thank
you're feeling better, my friend. Fed meeting's going to be big today. That is 2:30 p.m. Eastern time, 1:30 Central for us in Chicago here. But yeah, really excited. I think the market has really priced in a lot of this like de-risking prior to the Fed event. And now you see after that volatility climax last week, which we can get into in the charts in a little later, but like we're really rebounding here. S&P over 2% up today. Seems like people are expecting a pretty favorable outcome to this Fed meeting. So I'm excited and looking forward to discussing it more.
Yeah, I'm excited too, CJ. And, let's dive right into it because like you said, this has really kind of been what's been driving the market over the last couple of months here. We've seen in the past, kind of a sell the rumor, buy the news type event where whenever we have these Fed meetings, they're met with such tremendous sell pressure leading up to them. And then on the day of the announcement, it seems like that fear has already subsided. Most of that fear has already hit the market. And, we typically kind of rally after these meetings. Obviously, that's all contingent on what Mr. Powell comes out and says. But I'm just curious, CJ, how are you positioning yourself coming in to today's Fed meeting?
Well, I did buy a couple just short-term speculative longs. There's a chance that this rally could be sold into, of course. We did have tremendous sell pressure. So at the very least, you would expect some type of auto rally after the correction of last week. I think that the market has already priced a lot of these rate hikes in. So, we'll see how things end up. But the market has responded to Powell's discussions very favorably in the past. I think it's probably going to continue. Just a short speculative long. And I can get into more detail and the members only Doge of the day after this in the link below.
And I see this comment here, CJ, Fed delays the interest hike until after the election. One thing that you've talked a lot about is never underestimate the Fed's ability to kind of kick the can down the road. And I think if that does happen, if they push back the rate hikes, they don't say that they're happening, as soon as March or something like that, then perhaps we could rally today. But, if Mr. Powell comes out and says that, rate hikes need to happen soon, they're happening in March, then perhaps we'll see people fleeing from these more risk-on assets that they're kind of flocking to today. So very interesting day. Kind of seems like a turning point in my opinion, but excited to dive into some charts too.
Yeah, there's definitely two primary situations. I feel like, obviously, like you rally, and like you have a situation where people underestimate how much liquidity was truly injected into the system. So obviously, we have this correction in the short term, but that liquidity infusion that we had, keeps going and sends us to potentially new all-time highs. That is a potential situation. However, when you take it from more of like a technical analysis type of approach, we've broken some critical levels. We've already gone up so much in terms of parabolic price action in the last year or two. And so, those nature of cycles, like the more you go up, the more risk you have of creating a larger downtrend. And it's very possible we get that. So one of those two scenarios, I mean, is the most likely, but excited to get in some charts and be a little bit more specific. So
Yeah, and traditional equities, CJ. I mean, there's obviously been a very strong correlation between the performance of traditional equities and the performance of crypto over the last couple of months here. We started to see a little bit of a divergence from that relationship yesterday, and it seems like today, we could have a relatively interesting day of price action in both traditional equities and crypto, as it looks like equities are trying to bounce prior to this Fed announcement as well. So it was pretty interesting to note that there was a little bit of divergence yesterday. Bitcoin kind of leveled off. Crypto, a few actually tried to show some signs of strength, whereas traditional equities were still looking weak. Today, they kind of both look strong heading into this announcement. So today could be a potentially bullish day for the market.
yeah, I think they're going to remain correlated because you have basically the same market participants trading them. Um, they're very similar category in terms of like risk on tech stocks in the various portfolios of many managers throughout Wall Street. So you're probably going to see continued correlation. However, if we have risk on mentality that comes back into the market or just bullish price action in general, typically Bitcoin has led the charge on the upside. Now we can see altcoins coming back into the market, catching some life, seeing a little bit more of that risk on mentality come back in. So, to me, I said I was going to open up like a speculative long. That's a very short-term thing. I just want to see what happens with the Fed announcement and potentially have a play there. There's always that potential that we go up for, the next 2 or 3, potentially even 4 days, but then create a macro lower high and ultimately continue going down. So I think we're in this territory where, the macro trend is getting a bit uncertain, but these short-term plays still can be somewhat opportunistic depending on how you want to stack your odds.
Yeah, absolutely, CJ. And I think one thing that I touched on this a little bit last week, but I think it's worth reiterating at this point is one reason why I think that Bitcoin and the crypto markets right now are so tied to traditional equities is just because of the participants in the market right now. It's lots of short-term holders speculating on this market, and those short-term holders are not, the Bitcoin whales that we talk about that were driving price in 2017. These are short-term speculators that likely trade tech stocks and are looking for quick returns in a ripping market. And until all those people capitulate, that remains some heavy sell pressure on this market. And whenever that happens, we tend to see that correlation between traditional equities and between Bitcoin. But one thing that I'm looking for is when will these long-term holders and whales really start to cause a divergence in that price action? When will these whales start to protect their Bitcoin stacks and start buying and absorbing some of this sell pressure from short-term holders? It seems like that may already be happening here, and perhaps that's the reason why we saw a bit of a divergence from traditional equities yesterday. Is some long-term holders and whales buying the dip, but ultimately right now it still feels to me like short-term holders are really what are driving this market.
I would agree, my friend. And with that being said, why don't we jump into some charts? Starting with the S&P here, quite interesting in terms of technical perspective. First indicator I want to talk about is the Williams VIX fix, or just the metric that we use to measure volatility within the marketplace. This has been historically very accurate at calling local bottoms, especially on the weekly chart of Bitcoin. It's been extraordinarily accurate. You can see truly how much volatility we got back during the COVID lows. This is truly what the Fed and everybody, I think, other than the bears, obviously, are trying to avoid is some type of massive increase in volatility. Like what we saw here in the COVID lows. What we're seeing now is pretty consistent with like what we've seen throughout the bullish macro trend in these local bottoms. So if the macro trend is to sustain and continue upward, this kind of would be the time to do it with a lot of that volatility potentially marking a bottom. Also, we have a lot of oscillators that are turning up from oversold territory. You can see the RSI down here. This was actually the most oversold we've been in terms of the oscillators and the RSI on the S&P 500 since the COVID lows. So even if we are transitioning to a bear market, there's a non-zero sum probability of anything happening. So, I mean, I'm not saying that's the likely scenario, but I'm just saying if that were to occur, you're probably at least going to see some type of reaction rally close to the moving average up here. And that's kind of what my short-term bet aligns with. Also, you have the TD Sequential 9. It's not at the bottom of the downtrend, so it's not as influential in terms of a potential price reversal. Nevertheless, we did have that bullish hammer candle a few days ago, so I think it kind of evens out. So we'll see. I mean, it depends how the market wants to interpret this news coming out of the Fed. And right now I'm leaning more towards a positive outcome. Ethereum's already up 7%. Bitcoin, we have a very similar market structure as well, up nearly 4%. But the same type of idea, right? We have the TD Sequential Buy 9 indicator. It's not the close was not at the bottom of the trend, so it's not perfect, but it's still pretty good. And you have this rebounding formation that looks like it wants to at least go back to a regression of like 41K or 40K and test those previous resistance levels. At that point, sure, we could potentially get a new rejection down into further levels, but it's looking like we're going to see some type of reaction rally. We have a very similar type of metric with the volatility that's marked a lot of local bottoms. You can see it here. You can see it also in September. So that'll be quite interesting to see if we are actually able to rebound. But very similar with the S&P, we're hitting very, very oversold levels, and we're now starting to rebound from them and come back into positive values that are above 20 on the RSI. So from a technical perspective, you would expect some type of bounce here. So we'll see.
Yeah, we will see, CJ. And, I want to just quickly talk about the TD sequential indicator. You did a really nice job there, talking about it. But I want to just address some things I saw in the community last night. Some people talking about, when is the best time to use the TD sequential indicator? When, should I be applying this indicator in my trading strategies? And one thing that, was pointed out in the room is that this indicator is most useful during instances of trending markets. And the way I kind of tend to use the TD sequential indicator is let's start with a bullish example. So let's go back and find one. So here, right, we're in a trending market. The market's going up. We've put in 3 consecutive weeks of relatively positive price action. Just 3 weeks ago we were here at 29,000. Now we minted a 9. We're sitting at 47,000. This 9 here is telling me to take profit. At the very least, right? We're minting this 9 here, is telling us that bullish momentum is dying down. I would typically use this as an indication to take profit. I wouldn't close out my entire long position, not even close. But what this does tell me is that perhaps in the interim, some of the trend's getting exhausted, and if I do take profit, I'll have a chance to deploy that capital that that I took profit with back at a lower opportunity when this momentum kind of dies down and then starts to trend up again. We saw a similar thing here, a good indication of profit taking. This was actually kind of a macro 9, but more often than not, that's kind of how I use the 9s as an indication to either close a position or to take profit. And here, with this 9 at the bottom of the trend, I think you did a nice job explaining to CJ that you kind of use this app as an opportunity to catch a little bit of a bounce here. Or if you were short, this would have been an ideal time to close your short position. This 9 told you that bearish momentum was dying down. So if you were short, this would have been an indication to close it. Another way to look at it is that you could try and play a quick bounce here, like you said, CJ, opening up a long position here, and perhaps trying to ride it out to the moving average is something that would be typical of a reversal following a 9. But that does not mean that this bearish trend is over yet. This does not mean that this 9 is the bottom of the trend, but it does tell us that in the interim, bearish momentum is dying down, and that gives you a couple different ways to play the market. So TD sequential indicator is one of our favorites. We talk about it all the time, but I really think that in a market like this, there are some really interesting ways to apply it, really effective ways to apply it, and that's just one of them for me. So yeah.
Thank you, Tom DeMark. One of our favorite analysts. Great job inventing that indicator. It saved us a lot of money over the years. But
Yes.
thank you guys for watching. If you'd like to know the assets that Monty and I are trading, our current positions, You can join our community. It has a trading education curriculum, as well as a pro charting platform with a community of traders all throughout the world, and a live chat as well, so you can ask questions and participate in that particular community. And you can find that in the link in the description below. Also, if you like this video, please consider liking and subscribing, as that does help us quite a bit. But I hope you have a wonderful day in the world wherever you are, and we'll see you next time, guys. Take care.